Every time I've gone through a slump in my career, I could go back about 90 days and find the exact moment I caused it. And it wasn't random. It showed up in the same five or six numbers every single time. In this video, I'll show you how to break down your production into a simple set of numbers you can actually control, how to spot exactly where deals are falling apart in your process, and how to use that data to consistently land bigger, better accounts instead of spinning your wheels on the wrong opportunities. When I first got into this business, I was handed a phone book and told, go turn some of these people into customers. No roadmap, no structure, just activity. And for a long time, that's exactly how I worked. Some months were great, others were brutal, and I couldn't figure out why. But eventually I realized something. The results weren't random. I just wasn't measuring the right things. Once I started tracking a few key numbers, everything changed. I could actually see problems before they showed up and fix them before they cost me months of production. And what I realized is this: your production isn't unpredictable, it's just untracked. So let's break down the six metrics that actually control everything. Every slump I've ever had started right here. And the frustrating part is you don't feel it when it's happening. You feel busy, you feel like you're working, you've got emails going out, maybe a few calls here and there. You're in it. But what you don't realize is your activity is quietly dropping below the level it needs to be. And 60 to 90 days later, your pipeline dries up and it feels like it came out of nowhere, but it didn't. It started right here. So the first metric you have to track is simple: consistent outbound activity. And I don't just mean how many calls you make in a day when you're feeling motivated. I mean your baseline. What does a normal, consistent week actually look like for you? Because spikes don't build a pipeline, consistency does. Now, here's where most people get this wrong. They only track activity in terms of number of dials, but dials can be a vanity number. What actually matters is, are you creating real conversations? So, yes, track your calls, but also track your emails, your follow ups, your touches across different channels, and more importantly, track how many of those actually turn into real conversations where you're learning something about the account, because that's the whole point. And if you go back and look at your last 90 days, I'd be willing to bet that if things are slow right now, you'll see a dip in activity somewhere along the way. That's always been the case for me. And once you see that pattern, you stop guessing. You stop wondering what's wrong. You just go back and fix the input. Because if this number drops, everything else we're about to talk about breaks downstream. Now, let's say your activity is where it needs to be, but nothing's turning into meetings. That's where the second metric comes in: conversion rate. Because activity alone doesn't mean anything if it's not turning into conversations. And this is where a lot of producers get frustrated. They feel like, I'm making the calls. Why isn't this working? But they're not actually tracking what's happening inside of those calls. So here's what you want to break down. First, how many of those dials actually turn into a real connection? And then second, of those connections, how many turn into a meeting? Because those are two completely different skills. Dial to connect is about timing, persistence, and volume. Connect to meeting, that's about your message and who you're targeting. And if you don't separate those, you'll misdiagnose the problem. You'll think, I'm just bad on the phone, when in reality, you just might be calling the wrong people, or your message isn't relevant to them. And this ties directly back to something I learned the hard way. Conversion problems are usually targeting problems. If you're calling the right accounts with the right problems at the right time, your conversion rate goes up naturally. If you're not, you can grind all day and get nowhere. So instead of just asking how many calls did I make, start asking what percentage of the right people are actually agreeing to meet with me. Because that's the number that tells you whether your outreach is actually working or just keeping you busy. And once you start tracking that, you'll very quickly see where things are breaking, which leads us to the next metric. Now, let's say your activity is solid, your conversion is solid, but you're still not writing business. This is where most people say, I need to get better at closing. But most of the time, that's not the problem. The real issue is you're not generating enough real opportunities. And that's what this third metric measures: proposals, because proposals are where things start to get real. This is where a prospect has said, yes, I'm interested enough to actually look at options, And if your proposal count is low, it tells you something very specific. Something is breaking before you ever get to the close. Either you're not setting enough qualified meetings or you're not qualifying well enough in those meetings to justify putting together a proposal. And I've seen this a lot. People will have a full calendar, but when you look at how many of those turn into real opportunities, it's almost nothing. That's not a closing problem, that's a qualification problem. So, this is the number you want to track. Out of your meetings, how many actually turn into proposals? Because that tells you whether you're talking to the right people and whether you're asking the right questions to move the process forward. And there's another layer here that most people miss. Your ability to generate proposals isn't just about how good you are at selling. It's also about how clean your submissions are, how well you position the account, and how easy you make it for carriers to engage. If you're sloppy here, your proposal count will suffer. Even if everything else looks good, so when this number is low, don't just jump to, I need to close better. Look upstream because something earlier in the process isn't doing its job. And once you fix that, this number starts to move fast, which brings us to the one everyone obsesses over, close ratio. This is the one everybody obsesses over. How do I close more business? How do I get better at closing? But here's what I've found. If you get to this stage and deals aren't closing, it's usually not a closing problem. It's everything that happened before it. Because think about it. If you've talked to the right person, you've clearly understood their problems, and you presented a solution that actually fixes those problems, the decision should be pretty straightforward. It shouldn't feel like you have to convince them. So when deals just go quiet, when you present and then it's just crickets, that's your signal. Not that you need to get more aggressive at the end, but that something earlier in the process broke down. Most of the time, it's qualification. You either didn't fully understand what was actually driving their decision, or you were talking to someone who couldn't make one in the first place. So, yes, track your close ratio, but don't just look at it as a scoreboard. Use it as a diagnostic tool because this number tells you where you actually win. And when you start breaking it down by industry, by account size, by geography, you'll start to see patterns. You'll see where you consistently have success and where you don't. And that allows you to get more specific, to spend more time in the areas where you win and less time forcing deals that were never a good fit to begin with, which leads directly into the next metric, account size. This one changed my income more than anything else because for a long time, I thought the answer was more calls, more meetings, more proposals, more deals. But what I eventually realized is you don't need more deals, you need better ones. And that's what this metric forces you to look at, your average account size. Because if you're spending the same amount of time to win a $2,000 account as you are a $20,000 account, the math just doesn't work. And I learned this the hard way. There was a period where I was calling anything that would pick up the phone, small accounts, bad fits, things that were never going to move the needle. And yeah, I was writing business, but it wasn't changing anything. But the moment I shifted my focus and got intentional about only going after accounts that were above the average size I wanted to write, everything changed. My close ratio improved, my revenue improved, and I didn't have to work more to do it because the effort is almost identical. The outcome is not. So, this is a number you should know at all times. What is your average account size? And more importantly, are the accounts you're prospecting aligned with where you want that number to go? Because if they're not, you're building a pipeline that can never produce the result you're looking for. And that ties directly into the last and probably most overlooked metric, the quality of your list. This might be the most overlooked metric of all because most producers don't think of their list as something to measure. They just think, I need more people to call. But the truth is, your list determines everything. It determines your conversion rate. It determines your average account size. It determines your close ratio. If your list is bad, every other metric we just talked about gets harder. You'll have to make more calls to get conversations. You'll have lower quality meetings. You'll chase smaller accounts. And you'll feel like you're working twice as hard for half the result. And I've been there. There was a time I was calling into accounts that were never going to be a good fit. wrong size, wrong type of business, wrong problems. And no matter how much activity I put in, it just didn't convert the way it should. But when I started putting real effort into my list, making sure the accounts I was calling actually fit the size and type of business I wanted to write, everything else improved. My conversations got easier, my conversion rates went up, and the deals I was working were actually worth winning. So, this is a metric you need to track. Do you have enough high quality prospects in your pipeline that match the type of accounts you want to write? Because if you don't, you're building your entire process on a weak foundation. And once you fix this, all the un- uh, all the other numbers start working the way they're supposed to. Now, when you look at these six metrics together, you start to see something important. It isn't a bunch of random numbers, it's a system. Your list feeds your activity. Your activity drives your conversations. Your conversations turn into proposals. Your proposals turn into closed business. And your account size determines how much all of that is actually worth. So if something's off in your production, you don't have to guess anymore. You just have to look at the numbers and find where the breakdown is. And once you see it, you can fix it. Now, once you understand these numbers, the next question becomes, how do you actually use them to drive consistent growth? Because knowing where you're at is one thing, but building a system that moves those numbers in the right direction every single week, that's a different skill. And that's exactly what I break down in this video right here. I'll show you how to take a 3-year vision, break it down into clear targets, and then turn that into a weekly execution plan that actually drives results. So if you want to stop guessing and start building real momentum, click right here and I'll walk you through it.